Twitter set to report its second quarter earnings before the bell this morning. Analysts are looking for earnings of 5 cents a share. One big thing investors will be watching for is growth on the user base. Twitter surprised the street last quarter, adding 9 million monthly active users, easily beating the 2.3 million users that were expected. Meanwhile, shares of Facebook, take a look at this. This morning after the social media network's second quarter earnings beat expectations, the stock is up 3.75%. The company reported $1.32 a share. Joining us right now is senior research analyst at Neuberger Berman, Daniel Flax is with us. Daniel, it's good to see you.
Good to see you too,
Thanks
Maria.
so much for joining us. Let's talk about technology earnings so far. How would you characterize it?
So I think, Maria, if you look at the big tech giants, you have Google, Facebook, Microsoft, for example. They have had very good earnings. But what I think is most important is if you step back and look at the key trends in the technology industry, you have trends around cloud, mobility, social. And so at Neuberger Berman, we look for companies that have been able to build platforms. These digital assets are enable these companies to translate revenue into outsized earnings and cash flow growth. And so when we think about earnings over the coming weeks, and certainly what we've seen so far, we're looking to better understand and get more insight into what these companies are doing. So, for example, if you look at Apple, even though, of course, the market's focused on the iPhone 8 cycle over the coming 12 to 18 months, we think what's somewhat underappreciated is the value of their ecosystem. Other key trends within technology, security is obviously a key area. We think a company like Cisco, which is somewhat of a contrarian name, has been able to make key investments there. One other area we'd point to, certainly given what's going on in the world, public safety. And so if you look at a company like Motorola Solutions, which is a leader in that area, we think they have an underappreciated services business and more margin potential. So overall, we like what we see from the technology earnings so far, but we're really focused on the medium to long-term view.
So is it fair to say cloud and mobility, do you agree those are the two growth stories of tech today? Cloud and mobility?
Yes, I think that's right. I think basically, if you look at companies that have been able to combine the best of those elements, so for example, you have Google, or Alphabet as it's now known, they have built a tremendous cloud platform, and their Android operating system is really the brains behind over 80% of the world's smartphones.
That's interesting, Michael.
Yeah, so, Google, Alphabet, excuse me, we saw, the earnings.
It's okay.
The earnings, you know what I mean. We saw the earnings taken quite, a little bit negatively the other night because of rise in tech costs and things like that. Cost per clicks maybe going down. Is that something you think is a blip, and still the long-term picture is still intact there?
I think, Mike, that the long-term picture is absolutely intact, and there are a couple of reasons for it. So first of all, what's going on is the business is transitioning and growing more and more in mobile, and so that has an impact on their margins. But looking at the longer term, I think what's important here is their assets, for example, in TV. So you have the YouTube platform that they've built and that we think can be a revenue driver over the next several years. Another important thing is their cloud platform, and this is something that can compete with the likes of Amazon Web Services and Microsoft Azure. But more importantly, when you think about where the industry is going, you have a situation where the Google platform, obviously the Amazon platform, the Microsoft platform, these have the potential to drive significant growth at all of these companies. So we don't necessarily look at it as a winner-take-all, but you do have those assets, and Google, as I mentioned, I think has terrific potential.
Just really quickly, he mentioned YouTube and the critical importance of video moving forward, and you heard that in the Facebook announcement, because Facebook, in terms of the ads in its news feed, indicated that it's hit a ceiling in the number of ads that it can put in people's news feeds. So they're looking to video, and then of course the Messenger and the WhatsApp messaging app as well.
Putting ads in the Messenger.
Right, but video is going to be the next big growth driver for them in terms of ad revenue.
Absolutely, yeah.
Yeah, I think that's right. I think video is important, and the other thing, and you've heard Facebook talk about it, is building out communities. And so the more that they're able to focus their user base and generate value for them in terms of bringing them together, Facebook should ultimately be able to monetize their platform doing that over time. But again, it takes time.
You can look at the fundamentals, and I'm really glad you walked us through where you see the growth stories in tech, the fundamental story. But then you've also got to look at valuation. So out of the 5 largest technology companies, and I'm including Microsoft in that list, that's $3 trillion in market value. Would you buy them today?
So Microsoft, I think, is an attractive asset today. And part of why I say that is because we can see the growth drivers across a number of their businesses, cloud being notable. And so, for example, if you look at their Azure platform, that has achieved outsized growth. And when we speak to customers, what they are telling us is that they think Microsoft has really laid out a strategy which can help these customers transition to the cloud. Apple, which we talked about earlier, the valuation there we think is fairly undemanding. Of course, they need to execute on their product cycles. In our view,
but all these companies, the top 5, are valued at $3 trillion. So, I mean, it's not just Microsoft, the other 4 as well. Do you think that at some point, this is getting excessive, or you want to be buying these stocks today?
So I think if you have a 12 to 18-month horizon, these names are attractive.
Okay.
Part of why I say that is the free cash flow generation at these assets. And then most importantly, stepping back, what's happening is that these companies are going into the physical world. And as we put more and more intelligence into the physical world, these companies are able to attract and grow their profit dollars in non-traditional areas, and so that's why I think you have to look at it.
It's a great point. In fact, Ann Winblad from Hummer Winblad was with us. She's going to be with us this weekend on Wall Street Week, and she said that these 5 companies are now really in the bidding in terms of acquiring smaller companies. When you see these startup companies, it's not just looking for funding and new rounds of funding from big private equity investors. It's actually the corporates they're going to spend $67 billion in investing in R&D. That's more than the federal government spent on R&D last year.
Well, I think these big companies,
these 5 companies,
besides having obviously tremendous amounts of cash, they're very long-term oriented, and so not everything they do is going to work. But I think what has helped the 5 that you mentioned become so big is that they've learned from their mistakes.
Yeah.
And that's really what's key in being able to evolve the platforms.
Yeah, that's a good point.
Sort of on this thread, though, we're talking about these large-cap giant companies and how much they spend. You mentioned Motorola Solutions earlier. Are there other smaller companies or mid-cap companies that you think might be interesting with these trends of cloud, mobility, social that you've discussed?
Sure. So one name we continue to like is Check Point, which is a leading security company. We think that name has a lot of potential to continue to grow over time. We think what's important in this world that we're going into is you need to have significant intellectual property. You have to have a customer base that values what you do, and of course a roadmap to take them there over time. So Check Point is one name we like in the mid-cap space.
We're glad you gave us some stock picks.